Hey guys, Akil Stokes here. Welcome back to another episode of The Trading Edge, your weekly look around the markets. If you guys are brand new to the Tier 1 platform or brand new here on YouTube, I'm a Forex trader, trading coach, one of the co-founders of Tier1Trading.com and the host of the Trading Coach podcast. Now, last week's video was pretty large. This week, I don't have too much on the radar. Some of what we look at is going to be review, and some of it's going to be kind of a bigger outlook on the market. So hopefully it's short and sweet. I tend to rant and get off on some topics that aren't really, well, I guess they're trading related, but not chart related. So maybe it will be long, but hopefully you find value and hopefully it's enjoyable. Let's get started on the euro dollar. We're going to follow up on this pair. This was my trade of the week last week, and it did not disappoint. I had a very nice trade on it this week. Target ones were achieved. I still have half a position sitting in it for the move lower. And if you're not familiar with what that move lower is, make sure you go ahead and watch last week's video. It will give you all the review that you need. But I'm on the weekly here, and despite it being a bullish week, right? Technically, the candle is green, so it's a bullish week. It's still a very bearish signal. I still look at this as being, I guess, technically a weak bullish signal, which is, in a way, is a bearish signal for me. And you see that with the wick to the upside really continuing the same pattern that we had over the last 3 weeks. So I still would expect a continued move down. Obviously, the approach has to be a little bit different since we already retraced and pushed down to our previous structure lows, that 112 even handle, but lower is still the way that I would have my bias on this pair. And if you didn't see last week's video, if you weren't in the live room, I'll give you guys a quick recap because I think this is a good lesson on paying attention to the market, right? Being consistent in your routine. I think a lot of us get into trouble as traders because we lack consistency in our trading routine. We are hunting for trading opportunities instead of just doing analysis. And what you'll find out is that the latter actually works better. When you come into the markets with just the goal of doing analysis, you'll find that the trading opportunities or the best trading opportunities are going to fall into your lap. Where on the other hand, if you go into the market really forcing trades, you're going to find that you tend to see what you want to see, and sometimes you enter positions that may not be the best, but deep down inside you wanted to get short because some dude on Twitter said so, and now you find yourself in a bad position. But I want you to take a look at what happened over the past few weeks on this pair. And if you guys that join me in the live room every day, you've seen this hand in hand, right? So we started off with a head and shoulders pattern. If you guys remember this, right? We had our left shoulder, our head. We came down here, right? We had an upward slanting neckline, and we had a right shoulder, right? Now this right shoulder is a symmetrical right shoulder, meaning that if it falls in line with the level of our left shoulder, you can see the little spikes down here, the lower part of our head, and then obviously we hold right here on the retest, right? So what we did after that was this. We extended down as expected, lower low, lower close right here, just barely. And then we rallied up right back to that same level, right? We call this one, I guess it wasn't quite a Cody special, but one of our traders on the platform, Cody, did take this trade looking for a hold of this retest, lower low, lower close, and a chance to get short. And you see it worked out pretty well. But regardless of the trading opportunity, if you just keep tracking this level, and if you're consistent with your analysis and you have in your notes that, hey, this level was important because it was tested and held, at least for a short period of time, 1, 2, 3, 4, 5 times. When we came back up to this level, right, we put in a little descending channel here, equipped with some nice bullish diversions, right, for you guys that are working on that part of the course. Good example of bullish divergence here. Our RSI, Relative Strength Index, is moving in the opposite direction of our price. That's bullish divergence. Team that up with our falling channel. I might have said rising earlier, which we know is a sign for relief, and it's no surprise that we saw that move up. But when we come up, look where we came to. That same level of structure. So for someone that was doing proper analysis that really knew that it was an important level, right? It was already marked on their charts, and you had that if-then syntax going on in your head. Hey, if we hold at this level, look for my shorting opportunity. If we break that level, then don't. We put in a very nice hold here. We got a nice little signal on the hourly, that lower low, lower close, kind of a 4-bar reversal, not really a 3-bar reversal. And then we moved back lower to the 112 even handle. And then here's another lesson as well. Again, just recapping that trade. you're looking at a big trade like this and you have two, for me personally, I shoot for levels of structure. So we have a level of structure, lows right here. We have a nice juicy psychological number right here. Now, this is where we talk about these psychological numbers coming into play, guys, because sometimes you just have to be smart instead of greedy. And this was a mistake that I learned the hard way. As a newer trader, I was very stubborn. I wouldn't care about all the little stuff. It was strictly this level. I learned through experience and lots of frustration in trading reviews that these psychological numbers do play a part, a major part in the market. And what's more important sometimes and often is to put your stop loss or put your target at a safer level than a more profitable level. So you look at an instance like this would have been the more profitable level down here, right? It would have banked about 30 more pips from that 112 even handle. However, the question you need to ask yourself, is 30 pips, right, worth it? Is it worth the extra risk of perhaps not having that level hit? And for me, it's not. Keep in mind, my goal is to, really be, not necessarily be in and out of the market as quickly as possible, but my goal is really be conservative with my risk. I'm not necessarily shooting for massive trades, despite this being a pretty large trade. I'm not necessarily shooting for massive trades. I'm shooting to remove my target or targets at the first sign of danger. I'm looking to reduce my risk at the first opportunity where the market tells me that I can. And that's how this trade was really played out. We reduced risk right away. You'll see this clearly on the hourly. We reduced risk right away as the market ebbed and flowed down, getting it to break even and eventually locking in profit. And you can see we came right down to that 112 even handle, played a little dance, got first targets out of there, and hopefully we get a continuation. Now, as far as that continuation goes for you guys that are looking for opportunities, I would not sell right now. I don't think this, from a technical perspective, I don't think it's a good level to sell. What I would wait for is the next violation. So I would wait for these lows to be taken out, these 111.65, these lows to be broken and closed below. And if that happens, then we can start shooting for those two lower levels that we talked about in last week's video. So I do have a bearish bias still on the euro dollar on the higher time frames, but I don't think right now is the time to enter. We need to wait for the market to really confirm that bias again before we look to reload, before we look to enter in the first place. So the next pair we're going to look at is going to be the pound dollar. This was another pair that we looked at last week for a counter trend move. If you guys remember, we were looking right in this area. It wasn't a trade that I was interested in. It was a trade that one of the traders on the platform talked to me about. So hats off to you for executing that well, and looks like you got a pretty decent result. Now, what I'm interested in this week is going to be a short opportunity, and this is an interesting setup because here on the daily, you have a lower low, lower close, so a violation of our previous structure lows, which allows us to make the prediction that price is likely to go lower. However, when you go down to the 4 hour, you're not going to have that lower low, lower close. So just keep that in mind. You're going to have a spike and then a hold of that level of structure. But what I'm projecting is another move down, and I'll show you why. This is what we've done so far, right? So we've put in an equal measured move, right? You're going to hear this referred to as an AB equals CD pattern as well. And I kind of draw out the little letters for you, right? This is our A. This is going to be our starting point right here. Boom. Our first extension, the end of our first extension is going to be our B. That retracement right here is going to be our C. And then that D completion, that last extension, excuse me, is going to be our D. And basically what we're looking at here is that the move from A to B, this move right here, if you guys can see it, is going to be of equal length to C to D. And by equal length, of course, it's not exactly to a pip. That would be silly. The market works in zones, so it's equal length within a range within that zone. And this is where we had that CTS trade, right? We had that structure-based trade to look for the retracement. And we got a retracement. Now, what's interesting about this retracement is this, and you see this when the market is moving in sync, when the market is moving very harmonically in both distance and time, is check this out. If we copy and paste, right, our B to C retracement, and we drag it on down here, we essentially got an equal measured move for the retracement as well. And again, it's not exact, but these things work in ranges. And we got that lower low, lower close, which allows me to predict that we're most likely to continue lower. If we were to get another equal measured move down, that's going to put us right at a previous level of structure right down here, right in this area. Put this, boom, come on. Always have trouble with these drawing tools. That's going to put us at a nice level of structure right down here. So what I would look for during the week is a trend continuation opportunity to the bearish side, right? I would look for a move from right here at about 123.31 all the way to about 122s. Now that can come in many different fashions. I'm not saying I don't think it'd be a smart idea to enter this right now at market, but do like we always do, right? Go down to your lower time frame and look for the price action to ebb and flow. First thing I would look for is a violation of this level, right? This does not interest me too much. I want to see a clear violation of that level. And then after that, look for some relief patterns, right? Look for opportunities for the market to pull back and look for opportunities to hop on for that next extension down. There's going to be over 100 pips of potential profit there for you. So as both a swing trader, intraday trader, and a day trader, I think this is going to be a decent opportunity to look for a short. It's not going to be the greatest opportunity in the world, right? There are little mini levels of structure within there, but based on that higher time frame, I certainly think we can continue down to about that 122 level, or if you want to be a little bit more conservative, about 122.50s. All right, the Euro Aussie is next. This is one of our favorite pairs of the year. It's been slow for the last couple of weeks, but that's because we milked it for about a month beforehand. But you can see that price action is still resting at our previous structure lows, this area of consolidation right here. And we're really starting to lose movement in the market, right? The range of the candles are getting smaller and smaller. If you look at the last 4 weeks, right? 4 weeks ago, a month ago, we had the largest range candle. We then had an inside bar, which means the entire range of this week was within, I'll kind of draw this out and bracket it for you. The entire range of that week was within the previous week's range. We then put in another inside bar. We then put in another inside bar, right? So the third straight inside bar in a row. Now, for you guys that are familiar with inside bars are looked at as breakout opportunities. There's a good strategy where you can actually bracket it to one side or the other, and whichever side it breaks out to, you get long or short, and the opposite order becomes your stop loss. But to keep things simple, what you would expect from this narrowing range, right, is a potential breakout. Again, this is like the market treating price action like a spring, right? You're closing it tighter and tighter and tighter and tighter. Eventually the spring cannot get any tighter and boom, it has to break out in one direction. And that's what I would expect here. Now the question is, which direction are we likely to break out to? Who knows, right? These wedge patterns are 50-50. There's honestly really no bias in which we can use. We can create biases in flag patterns. We can create biases in pennant patterns and ascending triangles, descending triangles, falling channels, rising channels, all that fun stuff. But a straight kind of sideways wedge pattern, the only bias that we can create is going to come off of the rest of our technical analysis. And in this instant, I don't really see any reason to think we're going to go lower. I don't really see a good reason to think we're likely to go higher. So I just don't know. Now, that's just honestly speaking with you. I wish I can be your super trader guru and be like, this has to go this way. But the truth of the matter is, guys, we don't know, right? We are making predictions in the market. We're making predictions off of price patterns, historical price patterns, and what is supposed to happen. And this historical price pattern says 50-50 split, neutral, either way. Now, what we can do is we can go down to a lower time frame, or maybe even let's even go down to maybe a 4 hour, even lower, right? Kind of tighten this thing up here. And we can wait for the market to give us a clue one way or the other, right? We have our trend line, our upper trend line up here, our lower trend line down there. And we can say if price action breaks this trend line to the upside, right? Then I look for that retrace, that pullback in the structure, and a chance to go up. If we break this trend line to the downside, then I look for that pullback in the structure or that trend line and a chance to go down. So that's what I would do in this situation. We always want to be reactive, but I would certainly wait for the market to give you a clue of which direction it's likely to go into. And then once it gives you that clue, prepare on how you want to take the trade. All right, next we're going to take a look at the euro pound. This is going to be another review pair, one we talked about last week. So if you want kind of the bigger picture of this, make sure you watch last week's video if you haven't already. You guys should be watching every video anyway. I slave over my charts each and every Friday night to produce this for you. So the least you can do is support and watch, and maybe hit that like button, share, and comment as well. Wink, wink. But again, we were looking for a move up to our previous level of structure. We wanted to see a higher high, higher close for the day and for the week, or for the week and for the end of the day. And we ended up getting that. If you guys remember, or if you guys that are on the platform and watched the live room, I should say, if you guys remember, here's what we were looking at the end of the week. And this was a tricky situation because this wasn't necessarily a winning setup, but we were looking at this channel right here, this sideways channel. And what stood out about this channel is not only did we have the bullish bias from the upper time frame, but this was consolidating at or above previous structure highs at the very top of a range. So I had a really strong prediction that price would break out to the upside, and we did that. But price gave us some pain, and this was a tricky situation because we had a lower level of structure right here, but we had another lower level of structure right here. You guys know how I feel about these overlapping levels of structure. This was another very expensive lesson that I learned in the market, where if you have two levels of structure that are right near each other, typically the one that is further away is the most important one, and the market will do things like this to try and skunk you out. Now, if you were an aggressive trader, it's really going to depend on what your stop loss was at, whether you got skunked out or not. But this is a good example of the pros and cons of being aggressive, right? If you're super aggressive, you're not going to miss the move. If you all you require is, say, a single candlestick or maybe just a limit order, you're going to catch every move. But you're also going to catch some of the losers as well, because those are part of the moves. However, in this example, if you were more conservative, still aggressive in my opinion, but more conservative and waited for, say, a 3-bar reversal, right? 1, 2, 3, your entry would have been at this higher high, higher close, and you would have set yourself up for success. Now, you would have had to eat a little bit bigger of a stop loss because the lows are now measured from this 90-cent level instead of up here at about 90.16s. Does that meet with your risk reward? Well, that all depends on where you're shooting for targets at. If you're shooting for a retest of previous structure highs, it's probably not going to work out with you because you're looking at something like this and you're looking at something like this, right? However, if you were shooting for that bigger extension that we talked about in the higher time frame, then guess what? Boom, you're still at a 2-to-1, a very good risk reward. So this was a good trade for you, and that's how it's going to vary. This is how a trading opportunity you can have two traders looking at the exact same chart, looking for the exact same thing, and one says it's a bad opportunity, one says it's a good opportunity, right? It has nothing to do with the chart. It has more to do with the trader, how they trade, and what they need, what they require to take each setup. Now, enough about the past. Let's talk about the future, right? What do we have here, guys? Say it with me on the count of 3. 1, 2, 3. Higher high, higher close, right? So what are we looking at? Say it with me on the count of 3. 1, 2, 3. Pullback into structure. If we can get a pullback into structure, then we can look for the next extension up to that higher level. So this trade is still in play. It is still a valid setup. Just wanted to sneak in a lesson for you on the differences between aggressive and conservative trading and share with you some insight on my embarrassing past of not paying attention to overlapping levels of structure and losing lots of money doing so. All right, last but not least, we're going to talk about Facebook. This is a pair that we spoke about later in the week in the live room. We've been doing a lot more with stocks, just because of the stocks and different indexes and stuff like that, just because of the time of, I guess, the economic time that we're in. If you guys have been following us for a while, Jason Grayson and myself have been preaching, like, this is the golden time for you to be an investor, right? Everything is dirt cheap. And we've been translating that into really how to blend, investing in the stock market, investing in commodities, and investing in a specific index or whatnot, by blending that fundamental bias, but still using your technicals to print out levels. And Facebook was an example of this. Long story short, Facebook has been getting shamed. There has been a lot going on in the world. If I don't really check Facebook too much, aside to shamelessly promote content like this. But every time I click on, I see like some weird news feed, and I don't know if it's real or not. I have no idea if Facebook is lying to me or if it's truthful with whatever they're sharing. And there's a lot of, I guess two parties are battling. One is battling for, hey, free speech, you can say whatever you want. Another party is kind of battling for, hey, like you guys need to review this stuff to make sure false news isn't being spread, to make sure hateful messages aren't being spread and all that fun stuff. And essentially Facebook's stance, and they've been going through this for, since Facebook started, their stance has always been no, right? We don't want to regulate free speech. We want to let people say what they want to say, yada, 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 yada. Obviously, these times are a little bit different, especially with kind of like the race issue being at the highest it's ever been since I've been alive. And, also with all the other COVID stuff that's going on. And what happened is a lot of advertisers, or a handful of advertisers, are starting to pull ads from Facebook. And as the days go on, you're getting more and more bigger brands that are doing so. And obviously, you put two and two together. If Facebook is making money off of advertisers, and advertisers saying, hey, we've pulled them for the rest of the year, common sense would say that a lot of people are going to be fearful in Facebook and say, hey, this is going to be something that hurts them. Big picture, I don't think it's going to be something that hurts Facebook. I think Facebook has proven over the years that they are, I don't want to say they have a monopoly, but they are the best at what they do. Bigger picture, I think they're going to continue to thrive. But we know that people are emotional. And as investors or as traders, we can capitalize off of that. And you see here on the weekly, right? Big engulfing candle, big red candle of engulfment. And on the daily, we're looking at something else. On the daily, we're actually talking to our traders about taking advantage of this range, right? We were trading, we started talking about it earlier in the week, and we're saying, hey, if we can come back into this range, this is a chance to buy at the bottom. Now, obviously, again, kind of following up on the last pair, right? Was there any signal to buy, right? I'm not a believer in being as aggressive as just saying, hey, limit order down here, do it because I like the price point. I want to make a prediction of a level, and then I want price action to confirm that level. I want to see something on the chart that says, hey, Akil, you have a better chance at being right than wrong, and that's when I want to pounce. And obviously, this big high volume engulfing candle or high momentum bearish candle didn't say that. So this idea is crossed out. It's not a losing trade. It's not anything like that. It's just the idea never happened. Well, welcome to trading. Most of your ideas, most of your predictions will never happen. So what we do is we right click, we delete, and we reevaluate. We say, okay, well, where's the next technical level that Facebook can fall to, right? And we see this little deal right here. And this is nothing more than measuring out the ebbs and flows, right? Ebbs and flows and ebbs and flows. Which one are, I guess, flows are higher? Flows and ebbs, right? Either way, we've created this zone right here. We can look left, structure leaves clues, right, as it always does. And you can make your next prediction saying, if price action enters this zone, then look for X, Y, and Z, right? Whatever your entry requirements are, whether it's a specific candle formation, whether the RSI has to do something, if you're a MACD user, if does it have to dip under a certain line, right? Whatever is in your trading plan that you look for in these structure-based trades or these trend continuation trades, look for it in here, right? And look for that opportunity to buy Facebook up and trade it to the moon as long as you want to trade it. If you're a trader, maybe you're looking for some short-term targets. If you're more of an investor, you're just piling on your position and getting involved at a much cheaper price. But again, we're using that fundamental bias that you've created, and we're adding the technicals to it to kind of pinpoint the level that we got involved. And that's been something that's very helpful for a lot of our traders on the platform that are involved in other markets. And this is something that, I don't know if I'm ever going to get back into actively trading stocks. I do a lot of consultant work, I guess you can say, for a few of my buddies when they tend to look at things. But I'm always curious because when I was involved in the stock market, I had no idea what technical analysis was, right? I knew that a line chart told me how much the stock was worth, and that's about it. I was always curious on how I would handle things differently if I had the skill of technical analysis, and that kind of intrigues me. So I enjoy looking at stocks and different markets on a daily basis because, again, guess what, guys? They all move the same. The core concepts, the core principles are all the same on every single market. They just tend to have different personalities. So give it a try. Look at your favorite stock and start analyzing and doing some technical analysis, and I think you're going to surprise yourself. So hope you guys enjoyed this video. Hey, do me a favor. If you're not subscribed already, you're going to want to subscribe because I can't tell you when, but we have something big coming up. Might be another free workshop where you can get a week's worth of free education, and I may need your help so that you guys can custom build the content for it, meaning that instead of just coming on and saying, hey, we're going to teach you what we want to teach you, we're going to let you guys drive the show, right? That may be coming up soon. I don't know. But if you're subscribed and you watch each and every week, you will know. So do it and hit that notification bell as well. That way you don't miss the video. All right. Until next time, plan your trade, trade your plan. Tier 1 trading members, can't wait till Monday. You know, the Q&A is my favorite day of the week. We've been killing it, and I have no doubt that we're going to kill it again. Just do me a favor. If you have a question that is lingering, shoot it to me this weekend instead of Monday morning. Makes my life easier, and I can put together a much better training lesson for you when I have more than 15 minutes of advance notice. So I'll see you guys on the platform. I'll see you guys in the Q&A. YouTubers, I'll see you guys next week. Until then, plan your trade, trade your plan. You guys stay safe.